Ever wondered what it takes to get pre-approved for a mortgage? Well, a mortgage pre-approval is essentially a lender's offer to loan you money under certain conditions. It's beneficial for home buyers because it provides a clear budget, strengthens your buying position, and can speed up the purchasing process. Think of it as your financial passport in the real estate world. So, ready to learn about the pre-approval process? Here we go! First things first, understanding what you need for the mortgage pre-approval process. To get the ball rolling, let's dive into the 4 main areas lenders scrutinize: credit history, income, assets, and debts. Let's start with your credit history. It's like your financial report card. Lenders are essentially checking if you've been a good financial student. They look at your credit score and your credit report, which includes details about your credit card usage, payment history, and any outstanding debts. A high credit score can make you a more attractive borrower, as it shows you're responsible with your money. Moving on, we have income. Lenders want to see a stable income to ensure you can make your mortgage payments. They'll ask for proof like pay stubs, tax returns, or W-2 forms. If you're self-employed, you might need to provide additional documentation. Remember, it's not about how much you make, but rather whether you can comfortably afford the mortgage payments. Next up, assets. These include any savings, investments, and valuable possessions you own. Lenders want to see that you have some financial cushion. This shows them that even if you hit a rough patch, you have resources to fall back on. It's like a safety net that makes you a less risky bet. Lastly, we have debts. Lenders will evaluate your debt-to-income ratio, which is all your monthly debts divided by your gross monthly income. This helps them determine if you can handle the additional debt of a mortgage. It's like a balancing act. Too much debt can tip the scales and make lenders wary. So, to sum up, lenders are like detectives, looking for clues in your credit history, income, assets, and debts to determine if you're a safe bet. It's not about being perfect, but showing them that you're responsible and capable of handling a mortgage. Now that you know what lenders want, let's move on to the steps involved. It's time to dive into the steps of getting pre-approved for a mortgage. It can feel like a deep dive into the unknown, but don't worry. We're here to guide you every step of the way. The first thing you'll want to do is gather the necessary documents. This typically includes proof of income and employment, such as recent pay stubs or tax returns, as well as information about your debts and assets. It's a bit like assembling a financial jigsaw puzzle. But remember, all these pieces of evidence are going to paint a picture of you as a reliable borrower. Once you've got your documents in order, it's time to choose your lender. This is more than just a financial decision. It's a relationship. You're looking for a lender who offers competitive rates, of course, but also one who understands your financial goals and circumstances. It's like dating, but for your bank account. Next, it's time to submit your application. This is where you officially ask the lender to consider you for a mortgage pre-approval. It's like asking someone to the prom, but with more paperwork and less corsage. Once you've submitted your application, the lender will review your information and make a decision. The review process can take anywhere from a few days to a few weeks, depending on the lender and your specific situation. This waiting period may feel a little like being on tenterhooks, but it's a necessary part of the process. It's the lender's opportunity to do their due diligence and ensure that you're a good risk. Think of it as the lender doing their homework on you. And remember, this is not a race. It's more like a marathon than a sprint. It's about the journey, not just the destination. Take this time to continue researching and understanding the home buying process. Patience is key here. Remember, good things come to those who wait. So, let's quickly recap what we've covered about mortgage pre-approval. We've talked about its significance as a vital step in the home buying process. We've delved into factors lenders consider, like your credit score, employment history, and debt-to-income ratio. Then we walked through the steps to get pre-approved, from gathering required documentation to finding a lender and submitting your application. And there you have it, a step-by-step guide to getting pre-approved for a mortgage. Happy house hunting!